Good afternoon, traders, and welcome back to my YouTube channel. My name is Collins, and here I give you all trading information. So today we'll be doing a live backtesting session for a pair that I hold close to my heart, and that is the GBPUSD. We'll be doing a backtest session, go over through my trading strategy, how to enter, what's the entry criteria, what's the stop loss, what's the TP levels, and also how to manage these trades. I hope you enjoy this stream. It will be as innovative as possible. This will be my first video that I'll be uploading on YouTube related to trading content. If you like such content, please feel free to ask any questions, any suggestions on where we can improve. And I hope this content makes you a better trader and also gives you more insight into your trading style. And also you can borrow a few tips here and there to improve your trading. So as I mentioned, today we are going to do the GBP USD pair. We are going to do a random month backtest session, and for that we are going to use the random month and day generator. This is a tool I frequently use. So we are going not to backtest so far. Let's do from 2024 to 2025, and let's pick it a random month. So we've chosen to backtest in July 2025. So we're going to go to a trading view and then go to July 2025 on the first day. Then you're going to go there, and here it's where it starts. So let's start our replay session from this day here on Tuesday. Let's actually start there. Okay, so let me close this. Let me put it full screen so that you have a nice view of my screen. Okay, so let's start here. So I'm going to take you through my trading strategy, how it works, what's the entry criteria, and how you can best utilize this trade. So in my trading style, I think I'll just use one of these candles here. So what I want to do in my trading style, I want to identify the main chart. We're going to use the 4H time frame, that is the 4-hour, and we are going to first of all mark. So let's push it so that it's okay. It's 1st July, so we are already here. This is the first candle of 1st July. We are going to mark our 8 a.m. or 9 a.m. 4-hour candle. This one. So you can see here, it's the 8 a.m. 4-hour candle on 1st July 2025. So this candle opens at 8 a.m. and closes at 12 p.m. The time settings that I'm using for this backtest session, we're using UTC+3, which is in Nairobi, where I'm currently doing this backtest from. So once we've identified the 4-hour candle that starts at 8 and ends at 12, in some session you'll find that the candle will start at 9 and end at 1, but basically this is the same candle. This candle will mostly come into the London session, and it typically represents the first the 4-hour sessions of the London session in the GBP USD. So the first step is to mark it. I love using a box and having which shows a midline, and then I mark it on the high, and then the lower section of the box I put it on the lowest point of that 4H candle. The next thing we want to see is we want to see how the next set of candles will open and close in the next hours. So there are two scenarios that might happen. We might have a candle closing above or a candle closing below, or we might have a series of candles just closing in within the range of the high, of the marked high and the marked low of the 4H candle. So in this session, let's see what happened. So the next candle closed within the range. The next candle closed outside the range. So in this trading strategy, once we mark out the high and the low of the 9 a.m. 4H candle, we want to look for a breakout and a close above or below the marked highs of the 9 a.m. candle. Once we have a confirmation candle that broke, we also want to mark its high and its low. Okay. Then we're going to drop down to the 15 minutes time frame. And this was the initial 4-hour range, and this is the next 4-hour range that closed above. If it closed below the initial one, then we want to look out for sells. If it closed above, then we want to look out for buys. Entries are strictly at the midline level. So in this case, we can see that the price is already at the midline level of the 4H box. So I want to take a short position here. My stop loss will be above the 4-hour, and then we are going to target a 1:3. And now let's see how this trade played out. Okay, so we can see this first trade ended up in a loss. Not to worry. If it ended in a loss, just monitor for the next trades. But always ensure that you're risking about 1% of your account or less for this specific trade. I've used it for the last 1 year, and basically it generates around between 6 to the highest I've seen is 17% return monthly, basically using this strategy. One thing to note that I've consistently noted in my previous backtest session, and I'm going to take you back here to the 4H time frame. So just a minute, let's go back there. So one thing I've noted is if the candle that broke below or above the initial marked London session candle closes below but retraces to more than 50% of the candle, most of these trades don't play out. What usually play out is this candle probably closed around here, we'd probably look for entries around it. But since we already have the candle retracing almost to 50%, in the previous test session, I've seen that this setup does not result yield the returns we want. So let's monitor for the next 4H candles and see. So this, I would say this day ended up with loss, which would have avoided if we used this new strategy. But let's look out for the next day, and if there are opportunities in the next day setups. So the day is Wednesday, 2nd July, 8 a.m. Let's get rid of these ones that we didn't use and then just place it here. So as we mentioned, mark the high and the low of the 4H candle, and then look to see how the next candles open or close. So we had a very strong close to the downside. Next, we're going to mark this candle here like this. then drop down to the 15 minutes level. And what we want to do is we want to look for sell opportunities from the midline. Stop loss will be above the 4H where you marked, and then you'll target a 1:3. So, but before we play out, okay, let's document this. So the initial trade was first Tuesday, July 2025. Type of entry was a sell entry. Outcome was a loss, and trade duration we're going to confirm, but probably it was around less than an hour. Let's say 1 hour. Okay, so let's go back here and then let's see if our trade was triggered. So in this kind of setup, you'd probably put a sell limit here. Okay, so we are triggered. Let's see how the trade plays out. So it was triggered at around Thursday. Okay. And what I usually say for my trades, it's either stop loss or take profit. No closing the trades in between. So this was a very difficult trade. I'm ranging in the same entry area for so long. So instead of holding this trade for this long, let's see. Okay. Looks like we're getting a downside momentum back to the entry point. If we're going to stop it here, just because I think we are missing out a lot of entries that we could have. This entry was ended on Thursday. Let's move back a little bit. Thursday. Remove the two drawings here. Go back to the 4H candle. Okay, so here Thursday 4 a.m. Then we have 8 a.m. candle. So what do? You mark the high and the low, and see if there are any. So we had a strong close below. Mark the next candle. Then drop down to 15 minutes. Look for entries from the midpoint. We're going to put a sell here. Our stop loss will be just above here, and then we'll target our 1:3. Let's see how this played out. So there we had another loss in the month. Entry was taken on Thursday 3rd. The sell entry. Outcome was a loss. And now let's look for the next session, which was on Friday. Next session on Friday. So far we have 2 losses for the month. This is 4 a.m. Then this should be our 8 a.m. candle right here. So mark it with the box. It's a pretty small candle. First, we have the next candle closes outside. Mark the high and the low. drop down to 15 minutes. What happened here? I'm sorry. Let's see. Okay. I don't know what happened here. We want somewhere around here. So let's take it back here. Okay. So this is where we were. Sorry about that. So this is the 4-hour candle that broke. Go down to the 15 minutes. And remember what we want. We want to take a trade from the midline here. A stop loss just above there. And your risk toward is 1:3. Let's see if our trade was triggered. So we are triggered and we are in the trade. And as you can see, the trade resulted into a overall profit. So let's log this. So this is Friday. This is Friday. We had sell entry. Result was a win. Sorry, result was a win, and we held the trade from Friday, and it closed on Monday 9. So basically around 12 hours. So around 12 hours holding time. Good. So let's go to, so it closed on Monday 9. So there's a possibility we can look out for another trade that day. So here's our 8 a.m. candle. Just mark the high, mark the low, and see how the next set of candles. See, oh, that was a pretty good range. Nothing. So one rule I usually say is if you have to be realistic with your trading times. So yes, this candle closed above the 4-hour range, but it closed at 12 midnight. Based on how my trading rules are, I'm usually, typically, and most likely not awake during this time to take this kind of trades, and I'll typically not take it. Rule number 2 is if the candle breaks out of the initial marked range, it has to close above any existing wick that is already fair. So in this case, we have a very long wick here. So if we were to consider this time, assuming it was in a normal trading hours, it would have to close above this wick for us to consider it as a valid signal for entry. So but in this case it didn't, and we're not, and on this day we didn't have any entries that were triggered. So let's move on to the 8 a.m. candle on Tuesday 8th. So basically just again mark the high, mark the low, and then we have a very strong close below, then mark its high and mark its low. We can see clearly that it closed below the midline, of which that is a good thing. So what we want to do next is drop down to the 15-minute level time frame, and then look for sell entries since it closed bearish. Look for sell entries here at the midline. So you put a sell limit and then target a 1:3. So let's see how this one would have played out. So we're triggered, we're in. And here we are stopped out. Okay, so this one here we are stopped out. So we entered the trade on Tuesday. It's Tuesday, had another sell entry, which resulted into a loss, and basically holding time we entered it at Tuesday 2030 and it closed at Wednesday 16. So that is around 20 hours of holding. Okay, let's move on. So we're going to look at all entries that were valid that came out this month. So this is the 16-hour candle. Let's move on to Wednesday at 8 a.m. So here is a Thursday, a Thursday 8 a.m. candle. Mark its high and its low. Then let's see. Next candle, we had a very strong close below, then mark the high and the low again here. This is the midline for the 15 minutes. So we typically put sell limits here, our stop loss being here, and then we target our 1:3 kind of trade. And remember, once trade goes over midnight, so if there are no entries triggered between this time, we disregard this setup and look for setups the following day. So let's see how this one played out. So we were not triggered during this time, so we'd move on to the following day. So the following day we have, let's move on to the 8 a.m. candle. So let's remove this because it didn't play out. 4 a.m. candle. Next candle is this one. This looks like a very healthy candle. You can see that we had some news over here. We had the GBP month over month. Okay. So we mark the high, the low, and see how the next set of candles close. We had a strong close below. Then next you mark the high and the low, and we're looking for sell opportunities at the 15-minute level. So you want to take a sell limit from the midline, stop loss being there. Then you target a 1:3, basically. So let's see if I enter a straight. So this was on Friday, and after 12, if any setup is not triggered, then we basically move on to the next trading day, which was on Monday. So up to so far, we've had 4 trades, 3 of which were losses, 1 of which was winning. So right now we have the month we are currently at break even. So this is the 8 a.m. candle. Market's high, market's low. See how the next candles. Okay, so you can see here we have a very strong close below. You market's high, then market's low, then drop down to the 15 minutes. And what we're looking for is entries from the midpoint with stop loss just being above there, and then targeting a 1:3. And let's see if we had any trades triggered this day. So this day, no. So this was Tuesday, this was Monday. So Monday around 8, no trades were triggered. It's Tuesday. We look for trades on Tuesday. No trades taken on Monday. So on Tuesday, On Tuesday, we had our 8 a.m. candle here, looking very healthy. Just again, draw a box around it. Let's see how the next candle. So we had a very big spike, but no close above, and then a very strong close below. So I don't know. We've not been triggered. We just had numerous sell entries without any triggers. So it's quite disappointing. But let's see if we can get one trade here. So a short position. Stop loss just above at the high level, and then targeting a 1:3. So we go and let's see if our trade is triggered. So this is Tuesday. Nothing was triggered. It's Wednesday. No trades were triggered. Quite a very boring trading month. I can imagine the psychology, how the trader was being tested. No trigger to any trade entries. It must have been very disappointing, I can imagine. So let's go back here. Let's mark our high and our low of the 8 a.m. candle. Let's see if any trades close above or below. Nothing. And then we had a very big spike to the upside. But remember, one of the rules that we said, if a trade closes above, it has to close above the midline, and at this point it did not close, just shyly below the midpoint, and that we will not consider that as a valid setup in our trading, as per our trading rules. So let's move on to the following day. The following day here, it's Thursday, it's 8 a.m. Candle looking very healthy. Market's high, market's low. See if there are any candles that open or close above. This one did not. That one did not. And then we had finally one, but it did not close above the week, so we'll not consider it. Also considering the time, move on to the next day, which is Friday. So Friday, sorry. So Friday, let's mark here. So Friday, this was our 8 a.m. candle. We mark the high and the low, and see if there are any candles that close above. Then we have this good close above. We mark its high and then mark its low. Drop down to the 15-minute level. This time we want to take a buy. Going to take a buy here. Our stop loss is going to be just slightly below. And then you're going to target a 1:3. Let's see what trade is triggered. And resulted into a loss. So the entry here is on Friday 18th. Sorry, it's Friday 18th. Yeah. 18th Friday. This one was 8th. We had a buy entry, resulted into a loss, and that is 17, and at 19, so basically 2 hours, and we already wiped out. Such a depressing trading month, I must admit. A very depressing trading month. Okay. If you have any questions, please feel free to chat me in the comment box. Basically, we just log in the stats for this trading style, and at the end of the trading month, we'll see if it was overall profitable, what could have done better, and how we can improve this strategy. Okay, so next here we have the 8 a.m. candle. Same boring old stuff. Mark the high, mark the low. See if there's any candle that closes above. We have a very good close above. Mark its high again. and market low, then drop down to the 15-minute time frame. We're going to take a buy position from the midline right there, stop loss just being below, and then targeting a 1:3. So let's see if we're triggered. So you can see we have I've already moved to the following trading day. Now triggers. Quite a depressing trading month, honestly. But one thing is about trading psychology, it tests your patience, and you just have to put your trust in your trading rules if they are proven by data. So, same boring stuff. It's Tuesday, 22nd July. We've marked the high, we've marked the low, and the next candle doesn't close in or above or below. Then we had a very strong spike to the upside. And then we mark its high and its low, drop down to the 15 minutes time frame. And then we're going to look for entries from the midline for a long position. A stop loss just being below the 4H, and then we're going to target 1:3, and let's see if any trades were triggered during this session. Trades were triggered. No trades, nothing. No trades were triggered. So let's see how the Wednesday. So no trades were triggered. I forgot to put a stop on. So no trades. Quite depressing. So here we have 8 a.m. candle, market's high, market's low, and then see if any candle closes above. We have a very strong candle closing above. Let's see if it closes above the midline. Yes, it does. So we're going to drop down to the 15-minute time frame. We're going to take the midline, stop loss being just below the 4-hour candle, and of course we're targeting a 1:3 risk to reward ratio. And let's see if any trades were triggered during this session. So this one ends around here, and no trades were triggered. Oh my, I can imagine if I was trading this month, I would be crushed to my core. We're already at negative 1% for the month, and honestly, it's not looking so good. So again, mark high, mark low, see if any trades, any positions closed. We had one, market's high, sorry, market's high, market's low. What's happening? I don't know what's happening with my cursor. Okay, so I'm sorry, I don't know what's happening. It looks like we need to use arrive. Yeah, so drop down to the 15 minutes. This time we're looking for sell entries. Entry at the midline. This will be a very tight stop, targeting a 1:3. And let's see if any trades were triggered in this setup. So trades triggered, stop loss hits, Stop loss hit, then price reversed, and I think probably went lower to where our initial TP was here. But we have to log it as it is. So on 24th, it was on a Thursday. We had a sell entry, which resulted into a loss, and typically our losses don't aren't long. It was 30 minutes, and we were already out. So we're almost approaching towards the end of the month, and currently we are sitting at an overall loss, which represents the accuracy of trading. It's not all times you are profitable, sometimes you've been triple down, but what matters is your risk to reward, how much you risk at each trade. So this one on Friday 25th, mark for our candle, just like that. Sorry, I have to plug in my PC. Now it's almost running out. There you go. So let's monitor any trades closing above or below. We had a strong close below at here, and then the 15 minutes. Want to look for sell entries from here. Stop loss is right there. Then target on one is to 3. So let's see if any trades were triggered. Just push it. Okay, here you go. So we are triggered. We are in the trade. We are in the trade, guys. And let's see how this trade plays out. Good. So we had a TP. So the trade was taken on actually Monday. So this was taken on Monday, 28th. 28th on a Monday. It was a sell entry, which resulted into a win. And the overall duration, we entered it at Monday 1 and it closed at Monday 18. So around 17 hours of holding time. 18 hours of holding time. So you can basically see how much time you need to hold and trade when you're using this kind of strategy. So this was Monday. Let's push on to Tuesday and see if we can have the last trade of the month. It's already 29th of July. July usually has 31 days. Let's see if we can get any additional trades to close the month. So here again, we've marked our 8 a.m. candle. See if any candle closes above or below. This one closed just below, so we won't consider it. Then the next one closed back within the range, and typically I know at this time no one is trading. It's already midnight. Trade closed above. No one is awake to execute at this hours of the night. So we're just going to skip on to the next day, 8 a.m. candle. So sorry, I might have done that so fast. This was our 8 a.m. candle. Right side a sweep above, sweep below. And in my criteria, we once a candle swipes above the high and closes below, typically disregard. We only want trades that either close above, close below, close within, but not doing much of everything. So this one was Wednesday, July. I won't consider this as a trading candle, but you can see how, let's see how that trade would have played out. So it was a good sell, but did follow a rule, so we didn't take the trade. Then the last day of the trading month, we have Thursday. On Thursday, let's mark our high and lows, and then let's see where the next candles closes. We had us close below, mark the high, mark the low, drop down to the 15 minutes, and we want to take a sell from the midline, stop loss being just above 4 and targeting a 1:3. This has a very small pip stop loss, but let's see how this trade have played out. So we are triggered in. Let's see how this trade plays out finally. And there you go. We have another TP. So let's log this. So trade was entered on Thursday, that 1st July, which was the last day of the month. This was on a Thursday. On a Thursday, we had a sell entry, which resulted into a win. And basic holding time, we entered it at 17:45, and it closed the next day at 11:15. So that comes about to around an 18-hour holding time. 18 hours. And that, ladies and gentlemen, is the end of the trading session for the month of July 2025. Basically, these are the kind of trades we would have taken during that time. Let's do a quick recap on what we had. So to start off the month, we started heavily with losses, with one loss. This one was not triggered. Another loss here. Then we had another loss here. We had 1 TP, 2 TP, 3 TP. So when you log here, we have 5 losses actually. So that is 1, 2, 3, 4, and 5. And then at the win, we had 1, 2, 3. So assuming we had an RR of 1:3, 1:3, that means you'd have made 3, 6, 9, and then minus 1, 2, 3, 4, 5. So 9 minus 4, 9 minus 5, sorry, which is 4. So if you're risking 1% in each trade, you'd have basically ended up at a 4% profit for that month. And 4% might look like a little gain, but on a 100K account, that is $4,000. On a 200K account, that's $8,000. I mean, if you get that in a month, I would say that typically that's good money to keep you sustainable and running here in Kenya. So I hope you enjoyed this backtest, guys. Feel free to ask any questions about the strategy. It's a very simple strategy. I'm always refining it day by day. But what I can say, I've used it for the last around 8 months, and I've seen positive results ranging between 6 to a maximum of 17% return on different months. I hope you find it useful in your trading style. Please feel free to borrow ideas from this one. This is not the holy grail. This is just a strategy that I use. I hope it's useful to you, and it makes you a profitable trader. Please feel free to share any ideas on what you think I can improve on this channel. I'll be sharing similar contents on trading styles. I'm also working behind the scenes about algos. I also have some trading indicators that I'm working on, and also Python scripts and MT5 EAs on different styles of trading. So please feel free to leave a like, please share, subscribe, and I hope to see you guys on the next one. Bye bye.